Ladies and gentlemen, welcome back to the channel. The internet connection is finally restored. A little bit ridiculous. This seems to happen once every month or two. Nonetheless, we're going to talk about what happened in the markets today, what we can look forward to with AMC stock for next week. Guys, let's get into all of this critical information. Hit that like button and subscribe to the channel. Number 3, source your comments, questions, or concerns down below in the comment section. Baby, let's get into it because AMC didn't really have a day today. It was neutral to the close. It did not move in regular trading. It was up, it was down. Well, you closed 0.00%. So it did nothing. In after hours, you did drop about 1.09%. That is 6 pennies to $5.46 per share. And the technicals look really good, guys, heading into next week. And I know this last week was a bit of a disappointer because you had so many things going for AMC, especially because yesterday Netflix earnings came out that were just much better than expectations, basically across the board, but specifically with subscriber growth numbers. Netflix added over 7 million subscribers in the fourth quarter. We were expecting, or the street, I should say, was expecting about 4 million. So that was massively above expectations. And a lot of things did rally off of that. The markets, quote unquote, went pretty crazy today. The S&P up 1.86% in regular trading, and after hours up 0.10%. Now almost back to the levels that we were at just a couple of days ago when we got rejected at this downtrending level of resistance that we've just seen over and over and over again. It's almost like clockwork. You short at this line and you have always made money throughout 2022. It's that simple. Well, now you're back up to that level. And a lot of things benefited from Netflix earnings, but not AMC. And that's important to point out. And I do think there is still a lot of manipulation that is happening with AMC. If we take a look at the option activity today, there was only 3 orders that were flagged as interesting flow sentiment. And this can be because of, the quantity of orders, the way that they're put in by hedge funds. It could be the large dollar amount. Couple different reasons why these would get flagged, but let's run through them. So 7 minutes left of the trading day. 7 minutes left. You got 4,247 contracts, or I should say 4,247 contracts that were $747 a piece, totaling $3.17 million. And it was the April 21st $10 put, deep in the money puts, 3 million, 3 million, 3 million. 3 orders that went in at the same exact time, buying the same amount of options for the same dollar amount, for the same price of each individual option, again, for the same expiration. So this kind of option activity can be used to try to hide some of that short interest, to potentially, even oblige for some of the move that we've seen up in AMC's share price, to kind of oblige for some of those calls as well. That is certainly possible because, AMC did rally over the last week. You are higher this week than you were last week. And overall, AMC is up like 80% from its low that you set at $3.77, currently trading at $5.46. You have seen a rally, and orders like that, I think, are not helping the stock, right? But we've seen this in the past. When you get big option expirations like what we've seen today on Friday, 486,000 calls that expired out of the money, 39,000 that expired in the money. Puts that are in the money, 140,000. Puts that are out of the money, 183,000. So a lot of option activity, and you either get that explosive move towards the end of the week, or AMC just totally disregards the market. They can go against the grain and see that negative day. And today you didn't necessarily see the negative day, but you definitely didn't see it playing along like a lot of other stocks were. Even stocks that are in the quote unquote meme sector of the markets, meme stock sector of the markets, did better than AMC today. And just where the stock is at, the positioning of the options, where the short interest is, where the cost to borrow is, where the technicals are, this probably shouldn't have happened. I think that is a safe thing to say. I'm obviously not a financial advisor. I'm not a financial planner. I'm not the dude that you listen to on the internet to make your trades. I'm not your YOLO master, none of that. Come to your own decisions, your own conclusions on anything you buy or sell, because you are the one that is liable if you make or lose money. Obviously, the markets are ruthless and you can lose a lot of money. So quick disclaimer there. But nonetheless, what does this mean for the next week or two? What does this mean for the next month? Well, AMC on a technical basis looks really good. And why I say AMC looks really good is really this blue line that I have drawn right here. This is the level in which AMC rallied not the last time, but rallied the first time in January of 2021. And then you came down, you got that sell-off as you typically do after a big rally. You found support at this level. Then you came up, found support at this level, and you found support here 1, 2, 3, 4, 5 times. Then you went for that huge rally in June. But you're now at that same level in which we sold off under that. Well, now you're back above it. And over the last 1, 2, 3, 4 trading days, basically literally all of this last week, you have found support at this level. You have went under this level some days, but you have not closed under this level, and you have always seen a strong finish if you did go under this level. So what does this mean, especially as you're heading towards AMC's downtrending level of resistance that we have seen for almost 2 years now? Well, it's probably going to be a breakout to the upside unless earnings are just pitiful from big tech. Then there's obviously nothing we can do with AMC. It's just going to be a victim to the markets at that point. But as long as all is good and expectations are low enough heading into earnings, if you can just hold above this level, I think you'll get a positive reaction on bullish momentum in the markets, especially when AMC comes around to report earnings. I think there's going to be, some very good things said about the box office in 2023. And you should be getting more announcements from the credit card business, right? From all the other initiatives that AMC has done over the past year, almost 2 years now, that should start to become a tailwind instead of a headwind. You might start to even see a little bit of free cash flow on AMC's earnings, especially if AMC was a prime beneficiary of the Avatar movie, and I do indeed think they were, guys. So I do think brighter days are ahead for AMC, especially even when you consider the short interest and the cost to borrow rates where they are. If you take a look at the short interest of free float, that is still close to a record for all of 2022, sitting at 21.74%. The amount of shares currently sold short sits at about 112 million. Cost to borrow average 256.83%. Cost to borrow max of 327.96%, and cost to borrow minimum of 85%. These numbers can only stay high like this for so long. And any time in the past that you have seen AMC's cost to borrow rates in the hundreds of percents, you have always seen a rally with the stock, at least going back to January of 2021, the first time we ever rallied with AMC. It's always happened, right? We might talk about that in the next video, break down the individual data points and the correlations between what we've seen in the past and the rallies we've seen in the past compared to what we're currently seeing, because you're seeing the same exact thing play out over and over and over and over again, and you're in another round of that. And I do think there is a continuation rally that will become of this. Now, if we look at Interactive Brokers short availability, 50,000 shares available to be traded. At the close of trading on Friday, 97.2% cost to borrow rate. So it's not like these numbers are glitches. These numbers are very, very elevated. Now, if we take a look at one of the big news stories that we did get on the day, is that Fed Governor Waller backs quarter-point interest rate hike at next meeting. Federal Reserve Governor Christopher Waller said Friday he favors a 0.25 percentage point interest rate increase at the next meeting, confirming market expectations. Quote, beyond that, we still have a considerable way to go towards our 2% inflation goal, and I expect to support continued tightening of monetary policy, he added. Other officials have pointed to a 0.75 percentage point hike increase on the January 31st through Feb 1 FOMC meeting. But Waller is the highest ranking member to be that explicit. So you're seeing more confirmation of what the markets are pricing in. And I do think it's a fair assessment that we're probably going to get 25 after 25, as long as inflation continues to come down over the next couple of readings. The real problem is with the markets is going to be earnings at this point. And if the Fed keeps rates for, too long in this 5% range, almost 5% range by the time they're done tightening, that's obviously not going to be a good thing as well. That increases your odds of recession dramatically. Every 1 point that the Fed raises rates from here, or 1 percentage point that they raise rates from here, dramatically increases the odds of seeing a recession. Actually, right now is the first time you're seeing the M2 money supply coming down and GDP going up in this crazy ratio where M2 is falling so hard and GDP is suspectedly rising so hard at the same time. You've never seen this dynamic play out, and typically in the past, that has always meant for a bad year for the stock market. Now, anything is possible, who knows, but what I will tell you is that earnings over the next week or two will drive the markets. Virtually nothing else will matter besides these earnings. And let's go ahead and give you guys a quick rundown of what to expect for next week. And the notable names, really the ones the markets care about, really the only ones the markets care about, is going to be Tesla on Thursday. And then it's going to be Microsoft on Tuesday. If these earnings are not good, that's a problem, because the markets are expecting record profits, record margins for 2023 still, and that does not seem to be the base case or the most logical way to expect earnings for 2023, guys. So that's going to be a big concern for next week. The week after that, you're going to get the rest of technology. You're going to get Amazon, you're going to get Google, you're going to get Apple. Those players will be so important. And depending what happens with those earnings, if expectations get re-rated or not, that could depend and really have a big influence to AMC and what could potentially happen with AMC stock, guys. So we did cover a lot of ground here in this video. We got more to talk about over this weekend, so stay tuned to the channel for more updates, guys. Hit that like button and subscribe to the channel. Source your comments, questions, or concerns down below in the comments section. Most importantly, enjoy your weekends, and I will see you in the next one.